Welcome to another S&P 500 analysis. Today is January 28, 2022. What a volatile week for the S&P 500. Every day of this week, the daily range for the S&P 500 is more than 100 points. But surprisingly enough, the S&P 500 ended the week where it started and finished with a modest gain. So is the correction over? In this video, we'll look at the market internals, the sentiment, and the price action of the S&P 500 along with the other stock market indexes to see what they are telling us. Stay tuned. Looking at this heat map for the S&P 500, one would think that the entire session on Friday was very bullish. But if we look underneath the surface and looking at some of the internal, we'll see a totally different picture. Now let's take a look at the weekly chart of the S&P 500. As you can see, the S&P 500 had a range of 230 points for the week and closed up 36.5 point or 0.77%. They've been down for the last 3 weeks, and also just only this week is the first week that we saw is actually closing up. So we're basically still one time framing down, and the price is still beneath this 10-week moving average and 40-week moving average, and also it is trying to get back above this channel, this lower channel trend line. So we'll see what next week brings to see will it be able to get back above this trend line and get back inside of this price channel. All right, looking at this intraday chart of the S&P 500, as you can see, the market actually went down on the open, and it went down about 30 points in the first half an hour or so. And then it started to turn green and stay positive after the first hour and a half, a little bit more than an hour and a half of trading. But the other thing to notice is that you see that there are more new 52-week low than 52-week high throughout the entire session. And also looking at the up-down volume ratio, even though the S&P 500 went positive after the first hour or so, we notice that the up-down volume ratio is pretty much negative throughout the entire session, although we see a little spot of positive up-down volume ratio as the market is heading toward a close. The up-down volume ratio came up to almost 2.5 to 1 in favor of the up volume. But even before that, an hour and a half before the close, we actually saw 2 to 1 in favor of the down volume. So you can see that the market really not that strong throughout the session, except for the price itself. And only the last hour or so we saw that surge, and a lot of that is due to the monthly OPX. So that pushes up a lot of the prices. The VIX is still between the 20 and the 30 level, and also the put call ratio is above that 0.75 and sitting above 1 early in the morning and stay hovering near that 1 level. Most of the time it's sitting at 0.9 or close to that 1 and finish off at 0.94. Looking at the advanced decline, even though the S&P 500 was positive, but the advanced decline, most of the session, the decliner outnumbered the advancing. And looking at the early morning low there, we are actually looking at over 1,500 more declining issue than advancing issue. And once again, it's only the last hour or so that we saw a surge of the advanced decline turning positive and ended the session with more than 1,100 more advancing issue than declining issue. And here's the daily chart of the S&P 500. We'll take a look at it in more detail later on. Right now, I just want to show you the volatility throughout the week. See, on Monday, we had a very volatile day, and we spiked down and then closed up. So if you take a look at the range, it's 194.73. And then on Tuesday, we also had another over 100 point range, which is 123.9 points, so almost close to 124 point. And on Wednesday, we're at 148 point range. And on Thursday, we're at 119 point range. And Friday, we're at 140 point range. But throughout the week, as you can see here from that last Friday's close, and at the end of this Friday, when it closed, we're essentially up around that 34 point. So after all these, over 100 point ups and down each day throughout the week, the market is basically ended where it started. Right? When you talk about 30 some odd points out of a 4,400 point, it is not that much, right? So right now we're looking at a peak out on the VIX here. Remember, we're basically looking for extreme. So a peak on Wednesday because we saw it coming down, although it's still up in this 20-30 zone. But we're basically looking for the next peak on the VIX to see would it take out this high or put in a lower high, because what we want to see is something like this down here, essentially a lower high, and then we also get a little bit of a low on the index itself. Then essentially we are getting a little bit of a divergence, because when we see a lower low or a new low on the S&P 500, but a lower high on the VIX, then that will give us that divergence, telling us that it could be a little bit of a turnaround time. So if we see something next week come up and do this while the maybe the candle come down and put in a low, take out the Monday's low, then that would give us a little bit of a clue that we might be near the bottom of this correction. But until then, right now, we still have to get the benefit of the doubt to the downside. And also looking at the put-call ratio, you can see that the put-call ratio is also coming back, getting near that one level once again, because it closed at 0.94. Although throughout the, on Wednesday, it actually went down close to 0.75, try to get below that 0.75. But again, it is still in a risk-off type of territory here by the put-call ratio. And here, looking at the daily up-down volume ratio, see how misleading it is. If we did not take a look at the intraday action of the up-down volume ratio, we would never knew that there were time in the market. Most of the day, it was actually 2-to-1 in favor of the down volume. Although we ended the session with 2.5-to-1 in favor of the up volume, but that is only occurring in the last hour or so of trading. And same thing with the advanced decline, because most of the time we saw there were over 1,200 more declining issue than advancing issue throughout the day, and then we ended the day with 1,100 more advancing issue than declining issue. So sometimes if we just look at the daily chart, it kind of gives us a misleading picture. So that's why a lot of time we have to go back and also look at the intraday action to see exactly how did the market get from A to B. And here, looking at the New York Stock Exchange new high, new low, we're still seeing much more new 52-week low. Although on Friday it did not, match the Monday number, in which that was 803 new 52-week low. But on Friday, 549 stock made new 52-week low, with only 11 stock make new 52-week high. And that occurred with the S&P 500 actually up almost 2.5% or 105 points. And here we see the cumulative AD line came up a little bit, but look at the surge on the S&P 500. So although it is going the same direction, but the magnitude of the advance does not justify by the magnitude or the number of the advance over declining issues. And now let's take a look at the volatility on the Nasdaq market. Here's the Nasdaq 100. And for the week, if we just kind of measure this, for the week, the Nasdaq 100 gained a measly 0.17% or 25 points. Now, that is an index that is, somewhere around 14,400, right? So when it go up 25 points, that is nothing, right? But also looking at the range, look at Monday. Monday's range was 807 points, right? That's a heck of a volatility, right? 800 point. And then on Tuesday, dropped down to 376 point. Then on Wednesday, it popped back up to 640 points. And on Thursday, it was 446 point. And then on Friday, another 577 points. Now, every day, hundreds of points in terms of the swing. And what did it do at the end of the week? It ended up only 21 points. It essentially ended unchanged, right, for the week. So, but if we look at the up-down volume ratio, once again, it closed with 4-1 in favor of the up volume, and with 1,500 more advancing issue than declining issue. And now look at the new high, new low in the Nasdaq market. 1,161 stock made 52-week low versus 22 stock made 52-week high. And that is on top of a day that gained over 3% or 451 points. So is this really a strong market or a strong rally where there is over 1,100 stock made 52-week low and Nasdaq went up 400 some odd points? Go figure. And here the cumulative AD line, similarly to the New York Stock Exchange, the magnitude or the number of advancing issue over the declining issue does not support the magnitude of the Nasdaq movement. So in terms of the market sentiment and the market internals, we see that if we just focusing on the daily candle or the daily price action, the open and close, and it seems like that the market was quite strong and really turned around on Friday. But as you know, that the internals does not support that conclusion because we are still seeing much more new 52-week low than 52-week high. And the up-down volume ratio is still leaning toward the down volume. So although it seems like the market is turning around, but the internal weakness is still indicating that we could see a little bit more downside. Now let's take a look at this daily chart of the S&P 500. As you can see, we have this volatile week here. Right now, it is still trying to get back up to this trend line or try to do a back test at this 44.85. So we continue to watch to see what it be able to push up to this trend line here and come back and back test this 44.85 area. Actually getting close to this 4,500, and also the possibility of getting back and test this 45.45, this pivot high here, if it is able to get back above this trend line and above the 38.2. But if it come back down, then essentially I'm looking for this to break out of this zone and come down and retest this low here. You see, will we get a little bit of a bounce somewhere around this 4,200 area. Right now, the market essentially have came down, closed down with 10% from its high, and we saw a nice bounce back up on Friday after some initial weakness. So we'll see, will we get a continuation move on the upside in the early part of next week. The Nasdaq 100 closed on Thursday 16.5% below the all-time high. And right now, it seems to getting back above this low here on Friday. So we'll see, would it be able to continue to bounce toward this 15,345. Although we did see this gap got filled, but I don't anticipate this to present much of a resistance. And I see a potential resistance up here near this 382 and also these pivot high here. So we'll see, would it get a bounce back up there or will it reverse back? Because just like the S&P 500, expect to see this low to get tested. And here for the Russell 2000 on Thursday, as you see, it closed 21.46% from the all-time high. The Russell 2000 on Thursday is officially gone into a bear market. But it did close back up above that 20% level on Friday. So we'll see, will we see the Russell continue to bounce and try to make its way back up to this 2075, or it come back down and retest this low once again before it bounces back up to give us a sign that it has to form some sort of a corrective bottom here, or will it continue to move down to this 1700 level area. And for the Dow Jones Transportation on Thursday, it closed 18.85% from the high. So we're getting close to that bear market territory. If we take a look at this low here, intraday low, put that into the bear market. Right now, it's trying to get back to this 15,670 area. And that's basically this gap fill here, and also these this pivot. So we'll see what it'll be able to get back up above that. But again, even though it does, we still have to contend with this 15,346 as a potential resistance to see would it be able to get back above that, or would it get rejected and pushes back down again and possibly make itself down for these low here somewhere around 13,981. Now, out of all these market indexes, the Dow Jones Industrial has been the best performer, although it's still down. Like on Thursday, down, gave up 7.5% from its all-time high. Now today, it actually closed back up inside of this channel, so we'll see what it'll be able to make itself back up to this 35,625. Essentially this pivot high here, and see what it'll be able to work itself up. And here you can see the New York Stock Exchange Composite closed on Thursday, 7.39% loss from its all-time high. But looking at Friday, it came back in to pretty much close to the middle of this zone here. So we'll see what it'll be able to get up to this 16,708, and who knows, next thing we'd be looking at this thing breaking out again from this zone. And if it does, reverse back down and break this 16,094, then I'd be looking at this 15,775 level for the next potential support. Now let's take a look at the spider, the SP500 ETF. On this chart here, this is a 60-minute chart here, and also I basically took a composite profile here, a volume profile on this these prices here, and you can see this is the composite point of control somewhere around 432 level here, and you can see that on Friday this thing coming up to this high volume zone here, and this is somewhere around 442.5 level here. So we'll see would it be able to come up and break above this 443 level next week and pushes up toward this 455, or would it get rejected and get pushed back down and then test this 432 and work itself back down to the other side of this zone here, and this lower level will be 426, 427 area. Because if we break down from this zone, then I'll be looking at this low to get retested. And here's the QQQ, the ETF for the Nasdaq 100. As you can see that it is trying to work itself out of this zone here. So if it could pop back up above this 453 level here, and then we could be looking at possibly at 355, 356 area, even up to this 357. So we'll see what it be able to move up above this zone and get up here and chop around and then pushes up to the 370. Okay, that would be the upside scenario, but I'd be watching for something more of this, maybe get up here and get rejected and push back down, and then take out this low here and come back and retest this low and work itself back down, maybe somewhere around this 335 area. Okay, so watch this 340 level, 341 level here. Okay, if we come back down, dip below this zone, then we be looking at this low here, which is 337. And for the IWM, the Russell 2000 ETF, see, I kind of put in some new zone here. So here's the composite profile I'm looking at based on this price range here. So right now we're essentially looking to see would it be able to break into this zone here and move itself up and try to get back near this 205. Essentially trying to get up to this value area low, this composite value area low. See would it be able to get back above this 195 into this zone and then work itself up to this 203 area, or would it can reverse back down and then come back and test this low at the this 188 area. And looking at the 10-year yield, not much have changed on a weekly basis. We're still hovering around that 1.8 level. So although on Friday it closed at 1.78, but for the week it went as high as 1.857%. Remember, we're still looking at these cup and handle pattern, right? That's a small one, and this is a big one. So we're looking at this eventually this 2.5 level, 2.5%. Look at the US dollar, you see this surge here. We are looking at this 97.79. So on Friday, it really pushes up, and right now we are getting close to this 97.79 level here. And today it's actually closed at 97.26. So it definitely went above a 97 target, but we were still looking at this upper zone here. So we'll see as next week will it make itself up to this area and possibly move away from that and into this 98.8. And that would not be good for the market with a strong dollar. And interesting enough, even though with a strong dollar, oil seems to be holding up pretty well. I wouldn't be surprised that next week we'll see oil pop up and get above this $90 level. Now, silver did get hit by the strong dollar. Remember, we're basically looking for a possible pullback to see would it be able to hold above this maybe 23.5. And if it doesn't, then we're essentially looking for this thing to come down and test this 22.72 area. So you can see right now it's came below this and sitting at this zone here. So we'll see will we see silver bounces back up next week. But if it doesn't and come down, then we could see silver make its way down to retest this 1960 area. We also saw gold got hit a little bit on the end of the week. But again, it's holding up this trend line. Remember, we were saying as long as it holds above this trend line, we're still looking for gold to make its move up to this 1923 area. Right now, it's back to chopping around near this 1804 zone once again. So we'll see. Will next week have gold pushes back up, and maybe this time it will break this trend line. But right now, this trend line is at a lower level now. So again, we still need to see it be able to break above this 1846 and then push this up to the 1923. Let's take a look at the ES, the E-mini S&P 500 future here. As this is the market profile chart. Looking at this chart here, let me zoom this in. On Friday, we see that there is a poor high and a poor low. And also there is a single print zone here. So on the coming week, we expect these to get resolved, and how it get resolved will give us some idea of what the possible scenario of price movement. Right now, it's settled here at 44.13 1/4. So what we're going to be watching here is to see would it be able to move up and take out this poor high, and will it come back down and fill this single print, and then come down and test this point of control, then see would it be able to push back up again for the this high here and possibly make its way up toward the 4,500. But if it's unable to push back up, and it will and instead it just resolve this poor high, come down, fill this single print, and check this point of control, and then start pushing down to resolve this poor low, then I will expect to see this Monday's low to get tested eventually. Eventually, it will come down and put in a lower low. All right, and maybe after it come down and resolve the single print and the poor low. So that's what I'm looking at on the downside scenario. But if it decide to come back up, then we're essentially looking for the single print to get resolved. So let's say, for example, this thing come up, resolve this poor high, and then push it up, and come up and fill the single print, right, at the 4540 level, and possibly push up to this 4550 before it start making its way back down. Because ultimately, I'm still looking for the for this Monday's low to get tested. So eventually, I'm still looking for something, to form a little bit of a bottom before I look for a reversal back up to possibly get back up at this range. There is a little bit of a balance area here, and then we have a little balance area here. So if it break above this balance, then look for it to possibly make a move up here to this balance area somewhere at the 4550. But if it breaks below this balance area and take out this poor low and dip below it, then I'll be looking for this low to get tested. So that is the possible scenario that I'd be looking at for the ES. So in summary, after a volatile week on the S&P 500, it ended with a modest gain of 0.77% on a week-to-week basis. Essentially closed up 36 points. Every day of last week, we saw a range over 100 points on a daily basis. So is this market getting ready to move back up? And the answer is not yet. Based on the internals, we see that there are still weaknesses, especially on the number of stock making new 52-week low, and also the market sentiment, where the VIX is still at a fearful level. So we are not seeing extreme capitulation and extreme fear. Until we see that happen, the market is still just going to try to chop around to shake some of the weak hand out and then form a base before it starts to reverse back. Although we did see the S&P 500 close down a little bit more than 10% from its high and into the correction territory, but on Friday it closed back above that. So I still expect the market to come down and test that Monday low. Without seeing the Monday's low get tested, I still be on the lookout for a little bit more downside. So thank you for watching, and be sure to smash that thumbs up to help promote and share this video. And stay safe.